cash accounting means that. Means you see it is real, you don't see it, it didn't exist. So cash accounting basically is your bank register. That is why sometimes when we deal with small business and they will say that, oh, the bank wants my financial statement, they're asking me for cash flow statement. I am like, okay, are you cash accounting? They go, oh, I don't know what that means. And okay, let's look at your tax return, see whether that's marked as cash accounting or not. And if it is cash accounting, you just tell your banker that go look at your bank register. That's your cash flow statement. All right. So then, of course, now you probably ask me, oh, I am a grocery store. Is it good to be on cash base or be on accrual? So before I answer that question, let's just briefly describe what is accrual accounting. Accrual means that you can bring something that you haven't even made and you haven't spent into your financial statement. So for example, and if you bought inventory, you bought your Christmas shops kind of store at the month of December, your sales gonna go over the roof. So you ordered a lot of inventory. And you told the vendor that I am going to do net 30 days, so I have 30 days to pay you. And you ordered on December 5th and you pay on January the 5th, right? And if you are on accrual accounting, whatever you order, because you already have a payable of that amount, and you already count as expense on your book, so it is reducing your income. But what if you are on cash accounting? And you can reduce your income, can you? Because it is coming out in January. So with a store, with a situation like that, you clearly know it is better which way. And for a retail store, it's different from a dental office. These are the two businesses I use the most to describe what accounting method you should use. And for a dental office, after they service you with a dental service, they fill up the insurance company information. They submit to the insurance company for payment. The insurance company takes 60 days to get back to them. So you got your teeth cleaned, and they put in $100 to the insurance company to get reimbursed. The insurance company has all kind of discount. So they only give them $89 back 2 months later. So for dental office, most of them are on cash accounting because they want to count only when the insurance company deposit the money. Not only that's the best practice, it's also easier. Otherwise, what are you going to do? You are going to do receivable for $100, and when you receive the money is $89, so you need to figure out the $11 to write off. And so you already submitted your income to IRS for $100, and then next year you go, I need to reduce $11 because that $100 I didn't really pay in full, right? It's a lot of work. It's doable, but it's a lot of work. So most of the dental offices would just do cash method, and whatever deposit to my bank, that's what I got paid. That's what I'm going to pay in taxes on. So good practice. For most of the grocery store, what do? You would do accrual method. Why? Because on the income side, do you have customer who come to shop at your store and would say that I'm not going to pay you, 60 days later, and I'm just going to have the beef steak first, and then I pay you later. That doesn't happen, right? They come in, they buy, they pay you, and your income is always in practical ways. Your income is cash method. You always get your income the way you get it, right? But the expense is different. You always want it to be accrual because you always want to write off your expense already even before you pay for it. So what's the point to put yourself on cash method? You should be accrual. So with that said, you see accounting method is important. When you set up a business, are you going to let your folks, and without even checking with you, to decide on what method you're going to be? No, that's your number one question. What accounting method am I going to be on? There's a lot of stock traders out there, day traders. And when they start doing the day trading, they never thought about accounting method. And then after they lost a couple of dollars and noticed that they can only deduct $3,000 a year out of $3 million they lost, they suddenly realized that, oh, my accounting method is not right. Let's do mark to market. So accounting method, that should be your number one consideration when you get into the business.